Hello everyone, welcome to our YouTube channel Making Investments Simple. And today I would be talking about the power of options trading. And as I told you, this particular video doesn't um, actually recommend you any stocks or anything as such, but I'm just trying to show it to you how the power of options um, is available in share markets, stock markets, and how if your prediction or even speculation, even if it is a hedge position, is right, how it can make a huge difference if the stock moves in hugely or in big direction. So I missed out one example, live example, a few days ago, but then today I got another opportunity to show you in Reliance Industries. So Reliance Industries, as you can see, right now the markets are closed. Today it opened at 9:35 and 9:36, and as you can see, the nearest call would have been 9:40 call, and here it is, and it opened at 5 rupees 95 paisa, so that means approximately 6 rupees, and the lot size is 1000. So you had an investment of 6000 rupees, and if you had a good indicator which shows that this particular stock will make some movements today, or if the stock is in news, you can see it's actually closed at 33.80. That is 477%. So with a 6000 rupees investment, your money has actually grown up to almost 5 to 6 times. Now, as I told you, it made a high of 35.95, but even if you could not make that, and the because you can I'll come to it why it has moved so much. So as you can see, 6000 rupees investment, 6 to 7000 rupees investment, and if you would have squared up the position at close, you would have made approximately 34,000. So 6000 would have become 34,000. That's absolutely 28,000, approximately 28,000 rupees in one lot. And that's exactly the power of options trading is. Now I'll tell you why the stock has moved, or the options have moved so much. As you can see, the stock has opened as 935.80, and it made a high of to 975.70, and it closed at 970. So that means 940 rupee 940 call would be in the money, and the stock has rallied big time, and it closed near its day's high. So 975.70 was day's high, and 970.05 is where it closed. So 940 call will actually be known as in the money. So what is in the money? You can actually go back and watch my basics of options video. So in the money, it closed deep in the money, in fact. So deep in the money is where so here the in the money would be around 960, 965 call would be in the money. I'm not sure if it has strike prices of 5 rupees, but what I'm trying to say here is 940 has become deep in the money. So if your technical indicators had shown that there is a big movement, even if you would have taken a small put of Reliance, for example, to take a hedge position, you could have taken 930. No, I think it should be 920. Yeah, so there is a strike price of 20. So 920 strike price, and that actually opened at, I'm not able to see the price, but you get the point. It would have been, okay, I'm sorry. So that would have been opened at would have been a loss, the position would have been in loss. But if you would have taken a combination of 940 call and 920 put, that's the reason is because that's a long strangle option strategy, where it opened at 935. If the markets are going down, the put should make money, but again, that doesn't always work. If the stock is not moving like it did for Reliance today, then you would lose money. So that's something which you have to always keep in mind, that the stock, um, stock should be if it is moving in either direction, then long strangle option strategy works perfectly well. But if it is not moving much, then usually other strategies like short straddle or short strangle might work better. But as I told you, no one can predict, and do not try to predict the direction of the markets, and that's exactly where people go wrong. Even if I would have taken a position of 940 call only, that would have been a bad choice. Even if you would have seen that the 6,000 rupees investment would have made 33,000 I'm sorry, 28,000 absolute returns. But this is not advisable in live markets. When markets are going, the prices are going, no one can predict it, I'm sorry. And you should always take a combination of calls and puts. Always, one more thing, please do not take this combination near to expiry or the last 2 weeks of expiry, because premium decay happens very fast. So that means this, if the stock is not moving much, both your premiums, call and put, will keep on decaying it, and that will, in that way you will lose money. So that's another thing which you have to keep it in mind always. All right, so that's my views on it. I was just trying to show you the power of options trading, which is if you know where to invest, how to invest, and if your indicators are showing the right signal, you should always be hedging your position. But if your signals, or if the stock moves in one direction, then there is a very good chance that you will be making money in calls or puts. So one side will make enough profit that the other side loss will not even matter to you. So that's my view on it. So hope you enjoyed this video. If you have any comments or clarifications or questions on this video or on my other videos, please feel free to write to me, and I'll be happy to take your feedback to create more quality videos. Thank you, and I will see you again on my next video.